Welcome to the part of the week that matters the most. It's Wealth Matters, your wealth matters. I'm Warren, I'm a corporate banker in the City of London, and I'm here to make wealth building simple and accessible. Today, we are looking through 120 years worth of data from the Bank of England on the property market. And we are asking the question, how has the affordability of property in the UK changed over the last 120 years? I think you guys are going to be really surprised at some of the stuff that we're going to see. By the way, welcome to all of you new subscribers. There's been a ton of you over the last few months. If you're not subscribed, do me a solid and subscribe. Like this video. Let me know what you think in the comment section below. Follow me on Instagram as well. I'm at The Wealth Warren. So, right now in the UK, the average property for the average bog standard person like you and me, average property is 8 times our salary. And that goes up as you come down towards the southeast, and especially London where I'm at, we're up at around about 14 times. Now, why is that an issue? It's an issue because most mortgage lenders limit their lending to between 3.25 and 4.5 times your salary. So if you're up at 8 times your salary, most mortgage lenders will not lend to you. So you're gonna have to either find a cheaper property, which might mean moving outside of your city to a cheaper part of the UK, which a lot of people, especially in London, are doing when they want to settle down, or partnering up with somebody else, like a partner or a friend, and buying a property. And if those two are unviable, you are going to rent. And guys, even renting is really expensive within London. So what you see is a lot of people doing house shares or HMOs with other people, so that the cost of their monthly rent, i.e. just renting a room as opposed to a whole house, is a lot lower. So let's take a look at some of this data. Now, as you can see right now on screen, affordability, average affordability is just over 8 times, as we discussed. And that has been on an upward trend really since round about 1917. So we're talking just over 100 years of increasing property prices and an increase in the struggle to get onto the property ladder. Now, interestingly, what you can see is that there was a time in the UK before 1917 when affordability was higher than 8 times. From 1845 down to 1917. 1917 was when the World War I happened, by the way. So for obvious reasons, the property market tanked. But before that, properties were above 12 times the average person's salary. But you can see that, you know, there's this downward trend. Even before the war came, there was this downward trend. And as we can see in this article, it says it may only be of historic curiosity, but it is interesting that house prices were even more expensive in the latter half of the 19th century, that period that we just discussed. They then went on a multi-decade downward trend relative to earnings. This only bottomed out after World War I. There are 3 important drivers of this: more houses, smaller houses, and rising incomes. So let's start with the first point, more houses. We can see here that in England and Wales and Scotland between 1851 and 1911, the stock of houses rose from 3.8 million to 8.9 million. So more than a doubling of the housing stock. In the UK, they were consistently over decades meeting their house building targets and building more houses for the growing population in the UK, and that was one out of the 3 contributors to the improvement in the affordability of houses for the average Brit. Now, this really comes down to supply and demand, right? The more you supply of something, the cheaper it becomes. So think of gold. You know, gold is a rare metal, and there's certain properties of gold that make it a precious metal. But imagine if gold was, say, as common as sand on Earth. Gold will not be worth anywhere near what it is. Why? Because there is a limited supply of it and a high demand. Same thing with houses, same thing with any other good, right? The higher the supply, the lower the price. So that is the first factor that led to that decrease from 1851 to 1911. The second one is smaller houses. So let's have another read. Prior to 1850, the average house in England and Wales had a plot size of 913 square meters. Wow, that's huge. But houses built in the next 50 years only had an average plot size of 268 square meters. So you see this shrinking basically in the size of the average house by almost a quarter. So what I'm going to do is I'm going to infer that the smaller the house, the more that you can build. And I'm also going to infer that the smaller the house, the cheaper it is, right? So one house that is 4 times the size of another one, you'd expect it to be roughly 4 times more expensive. So more affordable for the average person. And then the last factor is about income. So while average house prices fell by 23% between 1845 and 1911, due in part to the 2 factors above, earnings rose by 90% over the same period. Wow. Good time to be alive, guys. You know, over that period, properties decreasing by 1/4 and incomes going up by 90%. So people can afford, again, affordability improves for obvious reasons. Now we can see 3 big factors that contributed to falling house prices from the very high levels that they were at towards the end of the 19th century. Now we're at a similar point, or even heading to an even higher point where we're at right now in today's Britain. So question is, are we over the next few decades going to have any of those factors come into play that are going to help affordability improve? So to be specific, are more houses going to be built, are smaller houses going to be built, and are incomes, real wages, i.e. not including inflation, going to improve, going to rise over the coming horizon? So starting with the first one, more houses. Government has a target, I think is around about 200,000 to 300,000 houses that they want to build per year to increase the supply or the stock of houses. They consistently fail to meet that. And that's why certain strategies like commercial to residential conversions are very, very lucrative, because there is a perceived need for housing in the UK. So if you as a person, as an investor, can convert a commercial property into a residential property, you can extract a lot of income from that. So yes, the government is trying to increase the stock of housing in the UK, but they're not meeting their targets. So it's a 9 for effort, 5 for execution for that one. We're not going to get the housing stock that we need, or sufficient housing stock, I don't think, over the short to medium term at least, to improve affordability for the likes of you and me. Secondly, smaller houses. Yeah, that's been the trend for decades now. You know, no longer do we have these, you know, Georgian, Edwardian, Victorian huge houses that were around in the 18th century and before that. We live in an age now where it's flats. We're building huge developments, small units, single and double unit flats in huge blocks. We're building upwards, guys. We're not building across, we're building upwards, because there's less land available, especially in the cities where people want to live nowadays. So people are building upwards and living spaces are becoming smaller. And interestingly, that's why you saw this search for space during the global health pandemic, where people in cities, especially in London especially, I think the net migration was 500,000 people left London to go and find areas of the UK where they can buy bigger houses for cheaper and have more space. And what you saw over the past 18 months was the prices of 3+ bedroom houses actually going through the roof. So smaller houses, yeah, it's a 9 for effort and a 9 for execution. And then higher incomes. Let's talk about higher incomes. Raise your hands. How many of you have had a pay increase, a real pay increase above inflation consistently over the last, let's say, 5 years? Crickets, right? Real incomes are stagnant, not just in the UK, but in a lot of Western countries, which is crazy, right? When you think of how organizations, how commerce has grown, how the likes of, you know, your Jeff Bezoses, your Elon Musks, even your Bill Gates, if you want to go a bit further back than that, you know, corporations have really become the new world empires. Profitability of companies is unprecedented right now. So you'd think that wages, real wages, would rise in line with that, but not so, guys. So out of that trinity, the only one that's being achieved is the smaller house element, but arguably that's probably the least material one. What you really want is wages to go up and there to be more houses, because that's really gonna have more of a stronger, more powerful effect on the affordability of houses for everyday people like you and me. So, interesting article, guys. I hope you found it interesting as well. Let me know what you think in the comment section below. Subscribe, and I'll see you guys soon.